Hello everyone and welcome back to studying FA with Tushita Gupta ACCA affiliate. I hope you all are excited to learn about this subject, about this chapter that we are doing. So this is a continuation of chapter number 1. In the very first short video, like I told you people, we are going to be having bite-sized videos so that these videos are easily, you people are able to easily follow through with these videos. So we are going to keep every video bite-sized so that you people, whenever you get some time, you can cover an entire small concept at once. So in the previous video that we have spoken about, we have learnt about the sole traders. Now in this video, we are going to move further to the different topic, which is partnerships. So like in the previous video, we saw how sole traders are basically business owners who run their own businesses. Now here, as the name suggests, partnerships. They are going to be partners here. So let's suppose if I was running maybe a grocery store business of my own. Now maybe I think that sometimes I'm not able to take the best of decisions, or maybe there can be somebody else. Maybe I can have a friend of mine who can be my partner, who can help me take better decisions. Maybe I am good at planning and she is good at execution. So I will plan the things, she will execute the things. So this is why partnerships are formed. Partnership is basically, as you can see the definition also in front of you, it's basically where two or more people come together, they own a business, they run the business together to make profits. So everybody wants to make profits. You know, the livelihood can only be sustained if we make profits. So if we want to sustain our livelihood, profits are important, and hence we are going to create partnerships where we are going to come together, use our collective knowledge, experience, expertise to own the business, to run the business so that we are able to generate profits. Now, you have the classic example of being ACCA also. This is also a partnership. I run this business along with Punya, who's my partner. She's my friend and she's also my partner. So here two people bring in different expertise of their own. I have my expertise in subjects like FM, PM, MA, FA. She has her expertise in AA, AAA, papers like BT. So all of this, basically we combine our expertise so that we are able to offer you different subjects under the same umbrella. So partnership is basically when two or more people come together, they do the business, they own the things, they run the business to make profits. Now, in the previous video also where we spoke about sole traders, we have seen how, different things work in a sole tradership. So here also we are going to learn how things are different. What are the legal differences of partnership? So from a legal viewpoint, how do we talk about partnerships? So very first thing to understand is partnership in itself is not a separate entity. So when you talk about, the tax liabilities, when you talk about can the company have its own, so it's not a company, it's a partnership. So can the partnership have its own assets? That's not possible. So let's read about the different legal differences. Firstly, talking about the change in business ownership. So basically this means right now, if you take the example of being ACCA, Punya and I are the only partners in this business. So can any other partner come into our partnership on their own without having our permission? No, that is not possible. Why is it not possible? Because if you want to admit a new partner into the partnership, then all of the existing partners should agree to that. So this is exactly what you will see here. All the partners must agree to a new partner being admitted to the partnership. So even if one person says no, then a new person cannot be admitted into the partnership. And then if let's suppose Punya and I decide to have a partner, to have another person coming in, so we will become three partners, then that person is also going to bring his capital. So this person will not just become capital by, coming to us and running the business with us. No, you have to invest capital also. So the partner will typically buy into the partnership by investing. That means the partner will also go back to his home, bring some of his money, give that to us, that okay, this is my share into the business. We can use this money to expand the business further. So this is the first point where we spoke about the change in business ownership. Next up, we will talk about business continuation. So by default, if you talk about a partnership, Usually, the document where you legally write that yes, we are making a partnership, that document is called as a partnership deed. So, we call that a deed. Now, this deed basically has all of the details of the partnerships, that who are the partners, what is the business going to be, how are they going to share the profits. So, all of this is what you put in the deed. Now, if let's suppose nothing is mentioned in the deed, if one partner leaves the business, then the partnership is going to come to an end. So if the remaining partners want to continue the business, they will have to form another deed, where that means they are establishing a new partnership. Now, if there is something mentioned in the deed that if so and so partners leave, then also the partnership will continue, then it can continue normally. But if there is no mention about the continuity in the deed, then what is it going to mean? If one partner exits, even if there are 100 partners, one partner exists, then you're going to the existing partnership will come to an end. And if you want to continue doing the business, then a new partnership deed has to be formed. So this is about the point of business continuation. Now, talking about the taxation part. So, like I told you people in the beginning of the video, how if the partnership is not a separate entity, so it cannot have its own, assets. It cannot be buying property in its name. So taxes also, because all of the income that the partnerships generate, all that income goes to whom? The partners. Partners are the owners. So the partners are going to be the ones who actually pay taxes also. So this is exactly what you will see over here. Individual partners are liable for tax on their share of the partnership profit. So for example, if a partnership has a profit of 100 rupees, 50-50 is the share of both of the partners, then the partners are going to pay 50% tax, or 50 rupees taxation, whatever is the rate, person A will pay and partner B will pay on his share. So if it was 70-30, partner A will pay tax on 70 rupees, partner B will pay tax on 30 rupees. So each individual partner will pay tax on how much they have earned, how much share they have earned from the partnership profits. Partnership itself is not going to be liable for taxes. What does this mean? This means the partnership itself. So let's suppose if we have formed Being ACCA. So Being ACCA will not be charged for tax. It is Punya Agarwal and Tushita Gupta who are going to be taxed for profits. So I will pay tax on my personal income. Being ACCA will not pay any taxes. Then the next point is with respect to the ownership of business property. So like I told you, it is not, partnership in itself is not a separate person. So partnership will not be able to own anything. All of the assets that the partners will be taking up for partnership will be in the name of the partners. So there is no separation of ownership. If I am a partner, I will also be the owner of the asset. The owner of the asset will not be Being JCCA, the owners will be Punya and Tushita. So this is how ownership of business property is going to work. It is going to be jointly owned by all of the partners. And then talking about legal action. So let's suppose if something bad happens, there's a court case going on against us, and the court has announced that this entity, this partnership, has to pay 50,000 rupees of fine. So if that sort of a scenario exists, again, because partnership in itself is not a separate person who will be bearing the fine, it is the partners. So Punya and Tushita will be bearing the fine. This is how legal action is going to happen. The partners will be legally liable for any penalties or fines if there is a legal dispute and court judgment is made against the partnership. So this is all with respect to the different legal differences. Now we will head towards the advantages. So the very first advantage that you will see over here is the defined roles. So like I told you people that I have expertise in only a few subjects. Punya has expertise in a few different subjects. So if we all come together, we can open a marketplace where all of the subjects can be catered to. So this is one very big advantage of partnership, that in your agreement, which is the deed, this agreement will set out how business will be managed, who will do what work, and how will the profit sharing work. So our work is clear. I will teach my subjects, she will teach her subjects. So this is how with defined rules, your specialties, your expertise can be put to use much better. So, like I told you in the sole trader example, if I run a grocery store, I am good at planning. I can have a partner who is good at organizing. So, both of us together can do the business nicely. I will plan nicely, she will organize nicely. So, this is how it's going to be a defined role which will help us run the business better. Then, the next point that you will see is with respect to raising finance. So, this is one way. Let's suppose if you're a sole trader, you want to do a certain investment. Now, because you're only a sole trader, no, but you do not have enough money to invest in that asset, so you will not be able to purchase it. But if you do it in a partnership, the partner will also bring in some of the capital, and with that capital, you will be able to expand your business. You will be able to invest in your business. So, raising finance point says if the existing partners bring another partner to the business. So, for example, if Punya and I decide to have another partner in our business, what is going to happen is the new partner will also bring some capital. So we will be able to invest more in the business. Then the third characteristic that you see is with respect to paperwork. So partnerships are not supposed to publish their information, financial statements, profit and loss account, balance sheet. All of this is not compulsory for partnerships to post on the public platforms. So if you compare any stock market listed company, it is mandatory for them that whenever the year has ended, they will get their statements audited, and then those statements will be published publicly. Everyone can see. Even if you're not an investor in that company, still you will be able to see the financial statements. Whereas any such rule is not there in the partnerships. So in a partnership, you get saved with a lot of paperwork. You do not have to publish the financial statements. However, it is good that if you people keep your accounting records, so that any tax disputes, or if let's suppose any issue happens, then you can use those records to solve those issues. So it's not really required, but it is good if you do that for your own purposes, right? And the next point is again correlated to this first point where we spoke about skills and knowledge. So different people are going to have their skills and knowledge in different fields. So if they come together, then the entire business can be run in the best possible manner. So this will enhance the business because they can now concentrate on what they do the best. So if I did not have Punya, I would rather than just teaching my PM, FM, MA, FA, all of these subjects, I'll probably try to teach AA, AAA also. And because that is not really my expertise, I may not be able to provide the best of the services. So this is how, if you have partners, different people will come with different skills and knowledge, and as a result they will be able to do the best because they have expertise in that. So this is another advantage of partnership. And the last point is with respect to risk. So here, because we are more people doing the same business together, if we lose out, if we make losses, then losses will also get divided. So if you are a sole trader, that means all profit is also yours, all loss is also yours. But when you're running a partnership, so if you're sharing profits, that means if bad times come, business makes losses, then losses will also be shared between the partners. So having more partners will spread the business risk. So that same amount of risk is divided among different people. So each person is taking lesser risk. So the impact of poor performance and losses will be reduced for each partner. So let's suppose if I am the only sole trader, I make a loss of 50,000. The entire loss of 50,000 is my loss. But vice versa, if I have a partnership, so if it's a 50-50 partnership, then I bear 25,000, my partner bears 25,000. So this is how my risk also reduces. I will also like to show you a quick video where so it's a sort of a funny video. It's actually a meme that you're going to like if we are studying the concept of partnerships. So this is one scene from a movie where you can say that these are partners, and they are sharing their profits now. So let's have a look at it. Only the Hindi students will be the students who understand Hindi would probably be able to correlate to it better. But via this scene, because it has visuals, even if you do not understand Hindi, you will still get what the idea is. So let's have a look. Let's have some fun. I think the audio is not coming. Just give me a moment. Okay. Now you people will be able to hear the audio also. I'll just make it full screen and perfect.
एक तेरा एक मेरा दो तेरा दो मेरा तीन तेरा तीन मेरा 50-50 बराबर है एवरीथिंग ओके ओके हैप्पी वेरी हैप्पी नो चीटिंग भाई अगर चीटिंग लगता है तो कैलकुलेटर ये कैलकुलेट कर ले भाई नहीं नहीं यू आर ग्रेट
Okay, so we saw a brief video where there were two partners and they were sharing their profits. So one partner was a smart one. So he was distributing the profits, but he was making a fool out of his partner. So this is one meme that usually trends over here in India, that whenever you try to try to work with somebody who's bad at math, so you can fool them. You give yourself one bundle, give the other person one bundle, then you say two are yours, so you give the other person only one bundle extra, but you yourself take two more bundles. So this is just a fun way of trying to teach you what partnership is really all about. However, you should not be doing things like this in a partnership. You should always be honest so that your partner can trust you with the business that you people are doing together. Okay, now let's wrap this video up by quickly discussing the disadvantages of a partnership. So the very first thing is the cost. Definitely, when you are getting your deed made, this will be a legally binding contract. So this has to be, drafted by a lawyer. There has to be the expenses that you bear to draw up this agreement. So drawing up a legally binding partnership agreement will cost money. Then if you talk about decision making, now here, if you are a sole trader, you can quickly take your own decision because you are the only one who decides what is going to happen. But when it comes to a partnership, what does this mean? All of the people who are partners, they're going to mutually decide the decision. Whatever they want to do, it's going to be a mutual decision. Hence, it can be time taking, because if there are multiple people involved, there may be some disagreements. If I think some way, it's not necessary that my partner will also think the same way. So the time taken to make decisions will be slow in a partnership if there's a disagreement between the partners. And what will happen is, if you take decisions late, then your progress and your development can slow down. The next point that we see is with respect to profit sharing. So here, if let's suppose there are partners who are 50-50 partners, so one person is very hardworking and the other one does not like to work hard. So now who is the hardworking partner also? He will also think that I am not going to get anything extra even if I work extra. So that person will also now have no benefit, no incentive. He will think I'll also work as much as my partner is working, because working extra is not giving me any advantage. So profits and losses are both shared among the partners. Hence, there may be no incentive for any one partner to work harder than the other partners. Whereas if you are the sole owner, then all of the profit is yours. So you will not mind working extra because the reward will also come to you. But here in a partnership, because the ratios are already fixed, so the partner will not be very much motivated to work extra, because ultimately he knows the profits will be divided in the agreed ratio only. Then the next point that we see is with respect to liability. Now this is a point that we can say is common in sole tradership also. Now if your partnership runs into losses, what can happen is the partner's personal assets can also be used to repay the liabilities of the partnership. So each partner's personal assets are also at risk if the business fails. Personal bankruptcy can occur. So if the partnership makes too much of losses, as a result, your entire money, your personal wealth can also go away completely. And then last but not the least is about disagreements and disputes. So if there are a lot of disagreements with the partners, what can happen is your decisions can take a very long time, and in the worst case scenario, the partnership can also be broken up. So that means if the people are not able to agree to one specific decision, then the best possible way, like in marriages we have divorces, so similarly here in partnership also they are going to finish the partnership. They will cancel the partnership agreement. So they will say that on this date we are dissolving the partnership, we are no longer partners, we no longer have any partnership firm. So this was the concept of partnerships. I hope that this is all clear to everybody. In the next video, we are going to go further into this chapter. Thank you for watching. Keep studying, keep learning. I'll meet you in the next video.